Welcome back, everybody. SF Live, episode number 88 today. I'm joined again by Philippe Cloutier in a few seconds. He's the president and CEO of Cartier Resources. But before we get started, again, quick reminder, please make sure to follow us on YouTube and Twitter and to subscribe to our channels, hit the alert button. That way you get notified when we go live with another update or when we have uploaded a new interview. Also, this is an interactive format, and we remind you to use hashtag AskECR, that's the company's ticker on the Toronto Stock Exchange, for your questions during this live chat with Philippe. I got the laptop going right here so we can get the live questions in and we can get them answered, because it's important for you. This format is for the listener. It's not for me. It's for you. So without further ado, actually, quick disclaimer, I own shares in Cartier Resources, and Cartier Resources is a client of ours, so we are conflicted, but I don't mind because I like Cartier. So let's switch over to Mr. Philippe Cloutier. Philippe, how are you doing? And how are things?
I'm doing very well, and I am also seriously conflicted because I own quite a bit of Cartier shares. Been buying shares for the past 13 years.
Perfect. We like hearing that. And for our new listeners, just give us a quick 30, 60 seconds rundown on Cartier Resources before we dive into more detailed discussions about Chimo and Benoist.
Very well. We're on the final stretches of something we initiated 4 or 5 years ago, which was a business model transformation. We focus exclusively on brownfields exploration, gold exploration here in the Abitibi Greenstone Belt. We were very fortunate to pick up 4 deposits, of which the past producing Chimo gold mine, and that attracted sponsorship by the likes of Agnico Eagle and Merian Global Management. And today we've been able to produce 2 resource estimates on the Chimo. We're lining up for yet a third in PA just around the corner. With $14 million in the bank, it gives us now the luxury to attend to our other deposits, such as Benoist, Wilson, and Fenton. So we're going to be producing news, on Chimo, and we're going to be producing news on Benoist and the other assets. It's a great place to be.
It is. At $14 million, we're going to get to that as well. But a lot of it is flow through as well. Is that the fire alarm in my office?
If it is, you should leave the office building.
I think we're good. But the $14 million, you recently raised $9 million, a little over $9 million in flow through. And that means it's earmarked for exploration, which is really important as well. But we're going to get to that when we talk about Benoist. I first want to talk...
This is really a hot stock. I mean, that is the fire alarm in your office building.
It does sound like it, right? So I'm going to ask you a question. I'm going to turn off my microphone to figure out what this is real quick.
Sure.
So let's start with Chimo. And you recently put out some engineering results. I apologize for that. You put out some engineering results in terms of hoisting capacity. You're using the engineering work to get to a PEA level result. So we're really curious now. Run us through the release. Give us some more context. What does the investor take away from that?
Absolutely. And I do understand that when you put out a release like that, you don't have the luxury of getting full context. Otherwise, people just don't really read all of it. So here we go. The Chimo mine was a past producer, okay? And you got to understand that at the time they were producing, well, actually, when Cambior bought this mine, there was no mill on site. Right, they were custom milling down the road on 2 other of their operations, and so they bought the project, and then they developed. While they were exploring for additional growth and additional resources, they were also mining what had been identified by the previous owner, and so the throughput at the shaft was conditioned on the shaft, the cable, and the hoist motors that were present at the time. And so a lot of people remember Chimo and a lot of the other producing mines in the area as having, a capacity of 1,200 tons per day. Well, in fact, the hoisting capacity, to some degree, is conditioned by the size of the shaft, right? The hole itself. But a lot of it is actually a function of the buildings that you put on surface. The size of the hoist, the size of the hoist and strength of the cable, and the size and hoisting capacity of the motor, and so we had to dispel some of the myths that whatever we found at Chimo was irrelevant, blah, 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 because mechanically or from an infrastructure perspective, you just couldn't address that. And so we methodologically went about it. We designed an engineering program where we would address the hoisting capacity of the shaft. We would address the mining capacity of the ore present at Chimo. We would address the production capacity. And then we threw in there, the modern approach of ore sorting or pre-concentration of ore. And so the context now at Chimo is we're 30 years later. We got a much higher price of gold. We have the luxury of having been able to map out the potential of resources at Chimo. And so in that context, we did have to address that issue and say, well, how much can we actually pull from the shaft? And it turns out that it's upwards, so up to and even more than 5,000 tons per day, which has an impact on the optionality and alternatives of what mills can you truck this to? Well, obviously, you truck it from that point on. You could truck it to the high capacity mills, such as the Goldex mill, such as the Canadian Malartic mill, et cetera, et cetera. And while keeping an option, an alternative of sending it to the lower capacity mills, such as the El Dorado mill, the West Dome mill, et cetera, et cetera. So for us, it was all about, or it was a crucial component of offering the project from an infrastructure point of view, as many options and alternatives moving forward.
Fantastic. And you mentioned 5,000 tons per day. That's, for me, that's quite a big number, but without context, it doesn't mean much.
Okay.
Give us a little more around it. Like, how can investors sort of gauge what it actually means? 5,000 tons per day. Like, yeah, it sounds like a lot, but what does it actually mean?
Look, huge open pits, like the likes of Canadian Malartic, they're blasting 50,000 tons per day. All right. The traditional mines along the Cadillac in the 90s, like, was 1,000 to 1,500 tons per day. The largest shaft at the time was Louis-Vicourt, the base metal mine right off north of the highway here in Val d'Or. The most, and some recent ones, such as Goldex, I think is in the 6,000 tons or 7,000 tons per day range. So, I mean, that gives you a range. So Chimo historically was 1,200 tons per day. And now we've demonstrated that from an infrastructure perspective, it can take 5,000 tons. And actually, it could take more. However, it would necessitate significant refurbishment, because there are rules that if you go above 5,000 tons per day, you need to have emergency brake systems, and then you have to change the railings on the timbers in the current shaft, et cetera, et cetera. So, I mean, we don't need to go there. Having established that you could really mine this deposit and extract the optimal amount of ounces for the lowest amount of operational expenditures, that's what we're gunning for.
No, that makes a lot of sense. And what other engineering work are you planning to release towards your final study there? Like, what else can we expect? What else are you checking that you're going to potentially look at releasing to the market?
Well, okay, so the resource estimate work, the drilling work that we've completed to date feeds into the resource estimate work. Then the resource estimate work basically maps out where all these ore blocks are and what grade you can assign to them, and you could play around with grade sensitivity and various cutoffs. And once you start to see or emerge a pattern of, okay, I've got a concentration of my mineralization in one area versus another, then you have to start to look at the mining capacity. I mean, how can I wrap around? How am I going to mine these zones? Can I push this area down to 1.5 grams per ton, whereas in this area I have to keep a 2.5 per ton? And that obviously, that's what we call the mining capacity mandate, which is in our PowerPoint presentation, and I think it's summarily described. That leads into the production capacity. At Chimo, again, we're lucky because this is a past producer. You have a shaft, you have drifts, stemming from that shaft going to the north and the south, gold corridors, as well as, ample access points in the central. So there's not a foreseen bottlenecking of the rock that you're going to break and get into that shaft and out towards the surface. All right. Yeah. And then the fourth engineering study is actually ore sorting, because you're gunning to take out the most amount of ore from underground, but invariably there's going to be dilution. So you want to be able to pre-concentrate that. So there are 4 distinct moving parts, and each of them has their sensitivity analysis. And then when you fuse all 4 of those together, that spells the paths that can bring you the highest internal rate of return or the highest revenue, et cetera, et cetera. And then it's it's not cookie cutter, and then you have to make decisions.
Okay, now I'm going to ask a question that I assume I know the answer for, but the 5,000 tons you mentioned hoist capacity, that is pre-ore sorting, correct?
Yeah.
Yeah. So
optimally, or I think the new mining methods like to consider that you're going to place your ore sorters underground to minimize, moving unnecessarily moving a mass of rock, and you're going to sort that underground, and you're only going to pull out. But in the case of Chimo, that would dramatically increase capex, right? So by putting the sorters at surface, you're offsetting that capital expenditure, and you're still able to pre-concentrate what is actually ore and eliminate the waste. And then you have the optionality of running it yet through another ore sorting process. So I'd like to bring a precision here. The ore sorting that we conducted and alluded to in our previous releases, well, that was done with the Steiner Group in Kentucky. Unfortunately, the test was run during the first lockdown at COVID, and we could not follow the samples and conduct what our vice president would have liked to do, the machine learning or machine calibration of the system then and there. But because of the fact that we could not be on site, we didn't get to do that. Very fortunately for us, there's a research facility in Quebec City that has picked up on that, and we're also conducting that second phase of the quote unquote ore sorting engineering work.
Yeah, are those results like material enough to be released separately, or are you going to just include them internally into your studies?
Well, yeah, they are material enough to be released separately once we're completed. But the goal there is to fine tune how much more efficient the sorting can be, because right now we know sorting can be done, but you could tweak that. I mean, what's the crushing required to get it to the optimal sorting, et cetera, et cetera? It feeds into the the PEA type work that we aim to conduct in 2021.
Okay, fantastic. Let's sum up Chimo maybe with a look at the timeline. You said PEA in 2021. Yep. Resource estimate, when do we expect that one? The third
resource estimate work is currently being done. I'd like and I'd hope that to be completed and cross the wire before Christmas, and then that triggers the PEA work, and that can take, I don't know, several months, maybe up to 6 or 7 for the PEA. But one of my greater concerns is obviously we're taking baby steps, technical baby steps with Chimo, and rightly so, we need to do them properly. So we have a data room where we feed the information to people who are interested into the project. And I would admit it, on their end, it could be quite frustrating because we feed the data room incrementally with data, and instead of just wham, dumping in a final product. But there are teams out there that can actually make decisions with continuous information flow.
Okay, fantastic. We're going to come back to Chimo during the Q&A because we've gathered a couple of questions already in via Twitter, and everybody can find those questions using hashtag AskECR. Let's talk about a bit Benoist. I hinted at the beginning you raised quite a bit of capital recently, flow through, which you have earmarked most of for drilling and exploration, obviously. So let's dive into Benoist and tell us more about the program you're planning to run, and when are we seeing some first results?
Yeah, listen, we're really proud about that because we raised the money at a time where people were saying, why don't you wait? Your share price will raise, you're diluting. And in fact, it's a testament to the fact that we knew where Chimo was going, and we needed to get on to our next flagship, which was Benoist. Now, Benoist is a project which was discovered in the early 90s, and it got really sidetracked or slammed into the boards when Briac scandal came about, and the industry just tanked. But suffice to say, the work done by Free West at the time had clearly indicated, a really robust endowment for gold mineralization on the project. So we raised $9.3 million, which most of it is earmarked for that drilling on the Benoist project. And the contracts have already been signed, and we're setting up to go and drill on Benoist. It's a 3-diamond drill rig program. We will be drilling the deposit itself, the extension of the deposit at depth, much like we did at Chimo, and the ore vision, deep-seated ore vision IP anomalies that we mapped out in 2014 and 15. So it's a really exciting diamond drill program, and we aim to repeat what we've accomplished at Chimo, but in a much more dynamic fashion on the Benoist project. So 3 drill rigs, concentrated essentially on the deposit itself and the extension. No geopoetry, no prospecting with a drill. Once again, I mean, I'm not saying there's not potential for that on this project. I mean, it is a big project, but we will focus on trying to demonstrate that this thing can also become the next mine in the Windfall District.
Yeah. I'm trying to remember. I haven't seen the press release that you mobilized drill rigs yet. So where are we on that?
Well, the design of the program, because of the nature of the beast at Benoist, we're already seeing that the optimal design is about 3 machines. There's going to be deep drilling. There's going to be shallow and moderate drilling. There's going to be a directional drilling crew out there as well. The work will get started mid to late December,
Gotcha.
and it actually go throughout most of 2021. Since the project is situated in an area of, it's a high interest area. I mean, it's the Windfall Belt, right? I mean, Osisko's working a lot out there, Bonterra as well, other up and coming junior companies. We're really excited, and we think that that's going to produce a lot of news flow for several companies, us as well.
Well, it's not just busy for deer hunting right now, from what I understand. So there's lots of drilling going on, and we've seen in other parts of the country, and because of COVID delays, there are actually delays to assays. There are quite a few bottlenecks company have to deal with these days. Do you expect something like that to happen? Have you secured capacity at a lab, or what's your plan there?
We're very fortunate to have carried over a lot of our contracts and to be well ahead in the process, in the work process with Chimo. But you raise a point that is significant. I mean, if you look at the press releasing on the cash raises that were done in the Abitibi area from July to recently, all of the likes of Wallbridge, Amex, Osisko, Cartier, Radisson, Monarch, I mean, all of these juniors are working on plays that are brownfields plays. There's about 1 million meters of diamond drilling that I've, sort of back of the envelope here. That's going to generate a lot of assays. There's going to be a bottleneck at the labs. There is going to be a bottleneck on the drilling company levels, looking for drillers, etc. And obviously, since most of that drilling is done on high-end projects, it's going to feed into a bottleneck at the consulting level where, once you're drilling a project like that, from an independent QP point of view, you have to shift it over to an independent consulting firm for the resource estimate and engineering. So I think 2021, the investors that are looking at companies in the Abitibi have to anticipate a certain level of delays. I mean,
well, during COVID, everybody ramped down personnel as well, and now they're being overrun.
Yeah.
So.
Oh yeah, and so I think people have to be cognizant of that, and we're just going to have to address that issue.
No, that makes a lot of sense. So I think we covered everything on Benoist. Should we spend a minute on Fenton and Wilson as well? We got a couple, but I really want to get to the questions as well because we got a couple good ones in that I want to touch on. So anything to update
we'll get
there?
to the No, we'll get to the questions, and then we'll do a Wilson Fenton snapshot some other
Perfect.
time.
No, focus is
Sure.
really Chimo and Benoist, and glad we
Yep.
talked about the engineering work there as well. So we got questions in here using hashtag AskECR on Twitter, and I really like the questions. One is from Arthur L. Cabrio, and he's asking Philippe, what are the shortcomings, criticisms of the Chimo mine project? Narrow deposit question mark, high capex requirements question mark. What experience or comps are you drawing from to formulate a price for Chimo? And have you sold assets before?
Okay, I'll start with the last question. I haven't sold assets before, but I don't see that as a big concern because there's a huge talent pool here, and a huge talent pool of people that have that skill set. So, and we know where Chimo is going. So, and people who sell assets usually are rewarded for that, and that in itself will attract that skill set to selling Chimo. What I do get a lot about the Chimo mine project is the myths associated to, 1980s and 90s past producers. All fill, I mean, a different time, these things come with encumbrances and so on and so forth. And so we've had to dispel those. We've had to take the databases, we've had to take the concerns that people have had for these deposits and bring them up to modern, standards. And in doing so, we actually discovered quite a few technical advantages to the project. So that's the positive side. The negative side is every time we discover a technical advantage, well, we're not gonna shelve it because it actually has an impact on the number of ounces that can be generated, bona fide ounces, without extra drilling. You see? It's either from a metallurgical standpoint, point of view, or an infrastructure point of view. So we're loath to shelve that. So it does add delays to the process. But in the end, we're only tackling those head on because it adds tremendous value. And I might have missed one of the questions you asked about the myths.
Just shortcomings, criticisms of Chimo. Like, what's a knock on it, right? So there's one, high capex requirements, and like what experience or comps are you drawing from to formulate your sales price or the price you have in mind for Chimo? What are you basing that on?
Okay, well, actually the Chimo infrastructure points to, well, what we feel should be a lower capex compared to any new projects being built. If you have to sink a new shaft, if you have to build a new road, build new power lines, then you're going to increase the capex. But I think that's under control at Chimo, and I think that's one of the obvious advantages to it. And then you asked a question about the comparables. Well, listen, I'm basing my range of selling price for the ounces on an interview that was given by the CFO of Agnico himself. I mean, I'm not making this up, where he points to the fact that, they're quite successful at conducting their own exploration. And when they find ounces at costs of $25-ish per ounce, in-house. And that stems, I think the interview was early 2020. And it could be found. I could send you the link. But then he also says, listen, we dabble in investments in these other juniors. And, if another company finds ounces, depending on the quality of those ounces, the reliability of the ounces, I think Mr. Smith quoted a range of $100 to $150 an ounce. So based on that, and based on the fact that we're trying to gun for and target about 2 million ounces at Chimo, you can derive an in situ value of 150 to $200 million transaction, but that's part of the arm waving that most CEOs would like to do.
So we're sort of hitting our time limit, but I have a few more questions for you though, and I want to ask them. And the other question is also from Arthur L. Caprio here on Twitter, and he's asking, what makes you confident that there will be bidders for Chimo after the third resource estimate, and without having developed a PEA yet? Do you think you'll sell it in between, or will we have to wait for the PEA? And if no acceptable bids surface, will you actually start developing the project yourself?
I'm confident that once we put out the third resource estimate, it will turn heads. Because I'm saying this because initially we would have been just extremely happy to get this thing over 1 million ounces. But the system has rewarded us. Our discipline at, on coming up with a very sound geological model and pursuing it. We've delivered, and now we're thinking that we're going to deliver 2 million ounces and more. So we're absolutely thrilled, and it should be turning heads, especially because it's by the highway. And naturally stemming from that, and because we've done all that engineering, we will go on to the PEA stuff. And in the interim, will it be sold between the third resource assessment and the PEA? I would like to think that, right? But again, I'd like to think that we have enough discipline not to sell an asset that we believe in at a discount. When you see a group selling assets at a discount, well, fundamentally, the only conclusion you could have is that they don't believe in their asset. We have a war chest, so we don't have to sell this at a discount.
Yeah, no, you won't be bossed around, that's for sure. So, and
no.
that's important. I got two more questions for you, which are more capital markets related. And one of them is, they're actually from CEOs.ca. Like, we post our interviews there as well. And one of the users actually direct messaged me on CEO.ca. And any comments on Desjardins being a large seller, dumping shares? And are you aware who the seller is? Is there any contact? And are you talking about maybe a block trade with them? There seems to be continuous selling in the stock. So.
I understand the question. I myself am quite frustrated because I usually see either Desjardins or who's the other one?
I think Canaccord, or Anonymous, yeah.
Or Canaccord, yeah. Well, Anonymous. Hey, thank God for Anonymous. If Anonymous wasn't around, there's been no liquidity on junior mining stocks. But joke apart, I have no idea who Desjardins is, who the seller is. Desjardins may be that label for the Disnat or the online trading account that's set up for a lot of people. They seem to be always selling. I don't know who it is. No, I do not. I'm not in the works of setting up a large block trade. Nobody's called me to say, Phil, we want out. Can you accommodate this? No, I have no idea, and I'm just as discouraged about it as anybody else. The only consolation is what I see on a daily basis being done in this office, what we're working towards at Chimo, Benoist, and the cash in the bank. I think we're one of the more robust juniors out there.
I would think so.
So bring it.
Yeah, no, I would think so for sure. Let's wrap this up here, and let's for the last 30 seconds, just put a bow around it in terms of near-term catalysts for us and news flow. What can we expect? What can investors expect?
Oh, the completion of the work that we initiated on Chimo, initiation of diamond drilling on Benoist, and try to capture or bring to the market more awareness of our story. Try to unlock the value. Come up with some creative solutions to have people realize how much value we've created on Chimo and what value we intend to create on Benoist.
Fantastic, Philippe.
That's it.
Straightforward. It's very simple.
Yeah. So was the office on fire?
No, it was an earthquake drill. So that I didn't know
really?
about. So I did not see the email but we're safe apparently, so all good. No, thanks for joining us, Philippe, and everybody else. Thank you so much for your questions. As I said before, this is an interactive format. It lives and breathes with your questions. And thanks for tuning in. Follow us here on Twitter, obviously, but also on YouTube. Subscribe to our channel and give us a thumbs up and hit the alert button as well. Leave a comment. Like, what do you think of Cartier? Is Philippe doing a good job? Are we doing a good job here? Let us know. Really appreciate it. Thank you so much. And Philippe, we'll catch up again very soon.
Thank you. Be